3 months ago, silver was at $30 an ounce. Then it hit 50, then 60, then 80. Then, I am not making this up, silver blasted past $100 per ounce for the first time in history. And then, it crashed. Almost 40% in a single week. And now, it's surging again. So what in the world is happening to silver? Should you be buying right now? Should you be running? And which Wall Street giants are predicting silver could hit $300 an ounce before this year is out? Silver, in 2026. The full story. What every American needs to know right now. Let's start with where we actually are. As of today, March 8, 2026, silver is trading at approximately $83 to $84 per troy ounce. That might sound like a random number, but let me put it in perspective for you. Just 1 year ago, you could buy an ounce of silver for around $29. Today, it costs you nearly $84. That is a gain of nearly 190% in 12 months. Your $1,000 investment in silver 1 year ago would be worth close to $2,900 today. Now, here's where it gets wild, and this is the part that has the entire precious metals world buzzing. In late January 2026, silver shot straight through $100 per ounce, a milestone that hadn't happened in the entire history of the silver market. It then kept climbing, reaching as high as $116 to $120 per ounce. Markets were going crazy. And then, bam, February happened. Between January 28th and February 5th, just 8 days, silver collapsed from $116.61 all the way down to $70.90 per ounce. That's a 39% drop in 8 days. For context, a 39% drop in the stock market would be considered a full-blown financial crisis. So what caused it? Let me break it down simply. The Trump administration's Section 232 Critical Minerals Report was released. Investors had been terrified that the U.S. would slap a major tariff on silver imports. When the report came out and said, for now, no broad tariffs on silver, a lot of the panic buying that had been propping up prices suddenly evaporated. The White House nominated Kevin Warsh as the new Federal Reserve Chair. Markets interpreted this as potentially more hawkish on interest rates, meaning higher rates for longer. Higher rates are typically bad for precious metals because they strengthen the dollar, and the market was simply overextended. Silver had gone from $80 to $120 in weeks, driven heavily by retail investors from India and China pouring in. That kind of momentum doesn't last. The froth had to come out, and it did, violently. But here's what the mainstream media isn't telling you clearly. Despite the dramatic February crash, silver is already bouncing back, and the fundamental reasons silver went up in the first place? They haven't gone away, not even a little bit. Here's the critical stat you need to know. According to the Silver Institute, the world's leading authority on silver markets, 2026 marks the 6th consecutive year that the silver market is running in deficit. Let me translate that. The world is using more silver every single year than it is producing. This year, the projected shortfall is 67 million ounces. To cover that gap, the world has to keep dipping into stored stockpiles. And those stockpiles are getting thinner every single year. Total global silver supply is expected to reach a decade high of 1.05 billion ounces in 2026. Mine production is rising to about 820 million ounces. Even at record supply levels, demand is still outpacing it. The deficit isn't going away. Now, one thing that makes silver completely different from gold is this. Silver isn't just a shiny coin you put in a safe. Silver is a critical industrial material. In fact, roughly 60% of all silver demand every year comes from industry. Not investors, not jewelry. Industry. Silver is the best electrical conductor on Earth. Full stop. And because of that, it's literally inside. Your iPhone and every smartphone on the market. Every electric vehicle, Tesla, Ford F-150 Lightning, GM's Silverado EV, they all use silver in their electronics. AI data centers, the same facilities powering ChatGPT and every other AI platform you use. They run on silver-based circuit boards and components. Solar panels, the green energy revolution runs on silver paste that coats the cells, and medical devices, from surgical instruments to water purification systems. This is why silver is called the metal of the future. There is no clean energy transition without silver. Now, here's an interesting wrinkle for 2026. Solar manufacturers, particularly in China, are starting to reduce how much silver they use per panel. Companies like Longi Green Energy and Jinko Solar are working on copper-based alternatives. Why? Because when silver went above $80 an ounce, it suddenly accounted for 17 to 29% of the entire cost of making a solar panel. That's up from just 3% in 2023. As a result, solar demand for silver is expected to fall by 7% this year. to about 194 million ounces. That's a real headwind. But, and this is a big but, the growth in AI infrastructure, electric vehicles, and advanced electronics is picking up the slack. The automotive sector alone is projected to account for 59% of industrial silver demand by 2031. Silver demand isn't dying, it's shifting. Here's the part of the silver story that honestly shocked me. We're not just talking about hedge funds and institutional investors piling into silver. We're talking about regular Americans. In early January 2026, Costco silver coins and 10-ounce bars sold out completely at warehouses across the country. Reports surfaced of items selling out in 4 seconds online. Costco had to implement purchase limits, 1 transaction per membership per day, maximum 10 units. Walmart is also selling silver. And here's the thing. Experts say customers at these retail giants can save up to $1,450 compared to traditional precious metals dealers when buying silver in bulk. Physical investment in silver is forecast to rise by 20% in 2026, reaching 227 million ounces, a 3-year high. Western investors who had been sitting on the sidelines for years are flooding back into the market, and investment demand from India, one of the world's biggest silver markets, is surging alongside the US. The message is clear. The little guy is waking up to silver. Now let's talk about the elephant in the room. Tariffs, because this is a topic that could send silver prices to the moon or trigger another crash depending on what happens next. Here's the situation. The US is what economists call net import dependent on silver. We consume more silver than we mine domestically, so we have to import it. Earlier this year, the Trump administration completed a Section 232 investigation on critical minerals, which included silver. The good news? They held off on broad tariffs. For now. The catch? They gave the US and trading partners 180 days to negotiate bilateral agreements on critical mineral supply chains. That 180-day clock is ticking. If those negotiations break down and tariffs eventually get imposed on silver imports, JP Morgan's own analysts say it could trigger another massive move of silver from London, the global physical hub, into New York, creating severe supply tightness and potentially another explosive price surge. Translation: the tariff situation is not resolved, it's on hold, and the precious metals market is watching every single trade deal announcement like a hawk. Now let's get into the big question everybody wants answered. Where is silver going for the rest of 2026? I've gone through all the major bank forecasts, and here's the full picture, because the range is wild. The bears say, JP Morgan's Greg Shearer has a year-end target of $85 per ounce. He says the rally overshot, the froth needs to fully come out, and silver could see sharp down days if gold stumbles. JP Morgan, in a separate research note, even warned that silver could theoretically crash back toward $50 if macro conditions deteriorate sharply. TD Securities sees silver around $65.50. HSBC forecasts $68.25. The bulls say Citigroup has a target of $100 per ounce. Bank of America's head of metals research Michael Widmer says silver could hit between $135 and $309 per ounce in 2026. Gold Silver's lead analyst Alan Hibbard expects silver to trade above $100 in 2026. CoinCodex's model shows silver potentially hitting $234.91 by end of year. So the range is literally $50 on the low end to $309 on the high end. That's how uncertain this market is. There's one metric that experienced precious metals investors track obsessively. It's called the gold to silver ratio. Right now, gold is trading at roughly $5,000 per ounce. Silver is at $84. That means 1 ounce of gold buys you about 59 to 60 ounces of silver. Historically, the long-run average ratio is around 50 to 1. But if silver eventually returns to the historical ratio of 15 to 1, and if gold stays near $5,000, that would put silver at $333 per ounce. Now that's a very aggressive long-term scenario, but it's the math that has serious investors paying very close attention to silver right now. One more data point that tells you how serious the big money is about silver's future. In February 2026, mining giant BHP struck a silver streaming deal with Wheaton Precious Metals Corporation worth $4.3 billion upfront, the largest silver streaming transaction by upfront payment in history. BHP handed over future silver production rights from their Antamina mine in Peru in exchange for $4.3 billion in cash. That is global mining saying, with their own balance sheets, that silver is valuable enough to lock in for decades to come. All right, let's get practical. Silver is not a get-rich-quick scheme. Silver is one of the most volatile assets on Earth. We literally watched it drop 40% in 8 days in February. The structural case for silver has never been stronger. 6 straight years of supply deficits, rising industrial demand from EVs, AI, and technology, central bank uncertainty, geopolitical tension. If you're considering silver as part of a diversified portfolio, most financial experts recommend precious metals represent no more than 5 to 10% of your overall portfolio. You can buy physical silver coins and bars, you can invest in silver ETFs, you can buy shares in silver mining companies, or you can access silver futures. Watch these key catalysts for the rest of 2026, the Federal Reserve's next interest rate decision, the outcome of the 180-day tariff negotiation window, gold's price trajectory, and any major announcements from solar manufacturers. If gold keeps climbing, silver almost certainly follows. And if a tariff on silver imports ever gets announced, buckle up. Silver's story in 2026 is unlike anything we've seen in a generation. If you found this update valuable, like this video, share it, and subscribe. Drop a comment below. Are you bullish or bearish on silver for 2026? I'm the Silver Index. Stay smart, stay informed. I'll see you in the next one.